Hello traders, David here again from Wave Trader. So today is the 22nd of January and I just want to share with you this trade that I picked up today on the CadJpy currency pair. This is such a beautiful trade. It's like you know putting on a silk shirt the way this trade is for me, and I just want to share that experience with you guys. So um like I said, this is the CadJpy currency pair and it was a sell trade. Okay, I just want to walk you through the process and show you how I got into this trade. So going through the pairs today, looking for setups, I came across the CadJpy currency pair. So right now I'm on the 4-hour chart, and you see where the purple box is. That is where I took this trade from. Okay, so I'm just going to delete this, okay, the calculations, and then walk you through what I saw. So when I came to this currency pair, I of course started from the monthly, and when I came to the monthly chart and I saw this, okay, I saw that we were in a gradual, call it an uptrend here right now, okay. Just this last couple of candles. So the last few months it's been bullish on the CadJpy pair. Admittedly, it's not a very strong trend, but at least it's going up. Okay, so when I came to this chart and I saw that we had the golden cross on the MACD actually, okay, and I saw that the two EMAs were coming together here. So actually what I was looking for was a trade to go to the upside. Okay, I now decided to go lower. I went to the weekly chart, and then however when I came to the weekly chart I noticed that we had what looked like an area of resistance here. So you can see that the MACD is trending up. Everything points to this trade, this trend being bullish right now. Okay, but if you notice, you can see that we've had a series of call them retracements. All right, we had the first one here which created the wave bottom situation, and you can see here to the past, you can see our positive divergence. And like I always say, whenever you see an incidence of positive divergence, watch out for a wave bottom or a wave top. So in this particular situation, with a wave with a positive divergence situation here, I'm just going to adjust one or two things here, pardon me. All right, so with an incidence of positive divergence here on the weekly, you can see that that created this wave bottom. So we call here the first wave, second wave, third wave, okay, or this whole thing is the third wave, however way you want to look at it. Anyway, the point is, by looking at this area, I saw that we are at a level of resistance. Okay, so I decided to go lower and see what I could see. So now you see where the purple box is. That was where the market was at the time I came to this chart this morning. So I saw this on the monthly chart, and I saw that on the daily chart, and I saw that we're beginning to have what looks like negative divergence. Okay, so even though we are in an uptrend, I know that this could push the market down a little bit. All right, so I went lower to the 4-hour chart, and on the 4-hour chart, when I got to the 4-hour chart, I saw that we already had a wave top situation here, and you can see a very defined negative divergence here, and I'm just going to mark that out for you guys. All right, so you guys should begin to pay attention to this a lot, because whenever you see an incidence of divergence, usually there's a wave top or wave situation. Like here, you can see that we had another incidence of positive divergence of MACD to the price. Okay, I'll just mark it again so that you will learn to recognize this on the fly. All right, and what happened? You can see that this divergence created a series of wave bottom situations which you could have traded to this region here. All right, so when I came to this chart, I saw that we already had a wave top situation and the market was already in motion. Okay, so I plotted my APAC here like so, and it gave me price targets to this region. All right, so I decided to, based on what I saw here, I was looking at this area here, which is also an area of resistance. So you can see, I'll just make it bigger for you to see. You can see that this area of resistance sort of coincides with the 5th target. All right, so by going lower to the 4-hour chart, I decided that I was going to consider the 5th target as my profit target level. Okay, so as at the time I came to this chart, the market was hovering, I believe it was this candle here, or this one. Okay, no, I think it was this one. Okay, this was about 10 a.m. this morning, West African time. So I went lower to the 1-hour chart, and this is how I got into the trade. Okay, you can see that we also had another incidence of positive divergence here, which was pushing the market up as at the time I came to this chart. All right, so the market was, I believe it was just here in this region, but because the overall trend was bearish, I didn't try to trade this to the upside. What I did instead was I took I believe I took the retracement from, was it here? Yes, I took the Fibonacci retracement here. Let me just delete this and show you again so that you can see it properly and understand what I did. Let's see here. I don't want to delete the rectangle, so I'm just gonna delete. All right, so I took the Fibonacci from here, okay, to this region, and you can see where the 62% region was. All right, so what I did was I placed a sell limit here at 84 point, well, the 62% is 84.26, but you can see the price that I entered here below, 84.25. So I was just 1 pip shy. Okay, so but I placed my sell limit there, and I believe I placed my stop loss here for just roughly 14 pips, because I was looking at this this spinning top here. Okay, let me make it bigger for you guys. So I was looking at this spinning top here, so I placed my stop loss just above that. So it was about 13 to 14 pips from my entry level, and I just shut off the computer. Okay, so I just checked it now, and you can see what happened. So what happened was that the market moved up, took me in, got filled at the 84.26 entry level, and you can see that the market actually went up. So that means that it must have been 1 or 2 pips shy of my area of stop loss, but because I wasn't watching the trade actively, I wasn't there to panic. Okay, so sometimes it's good to leave your trades to run. So in this particular instance, I was very fortunate, and just by 1 or 2 pips, I was not taken out, but at least I was correct in what I believed that the market was going to do. And you can see what happened. The market dropped like a stone thereafter. And if I had been watching this trade, I would have gone in again, possibly with 2 or 3 more lots. But I entered with 1 lot, and I'm okay with what I got, because from where I got in to the 5th target, if we were to mark that, I'll have to take it from here to show you guys, but this was where I plotted that. Okay, so this is the 5th target right here. All right, so going in there to the 5th target, I think I netted about, well, you can see here is $525. So I think it was roughly 53 or 54 pips that I got from this trade, and I'm very happy with that. Okay, so it's not just about the amount of money that I made, but rather the fact that the wave trader system works like a charm. Okay, so once you find a trend, all you have to do is plot your Fibonacci, and most of the time you get taken in, okay, for profit. So I hope that was insightful for you guys, and as usual, just rewatch this video until you understand the logic of what I'm trying to say, and watch other videos as well that tell you about how to get into trades like this. Okay, and if you are a newbie to my videos, and you are confused about how to watch these videos, okay, I will advise you to go to the YouTube channel and click on playlists. You will see that I've categorized the videos in such a way that even if you are a beginner, intermediate, or professional, you will find the videos labeled in such a way that you can quickly pick up based on your level of experience. Okay, so thank you very much, guys, and happy trading.